1993. India was changing. Liberalization had cracked the economy open. But in the middle of it all, a company quietly went public. Its name? Infosys. Let's say you had just rupees 10,000 in 1993. Not enough to buy gold, not enough to buy property, but enough to buy a few shares of Infosys. No one knew this back then, but that decision could change your life. Because that tiny investment would have grown beyond anything most people can imagine. Infosys was listed at around rupees 95 per share. With rupees 10,000, you could buy approximately 105 shares. But Infosys didn't stop there. It gave bonuses. It split its shares. It grew. And it kept growing. Fast forward a few years. The dot-com boom arrived. Suddenly, software was the new oil. Companies were hiring coders by the hundreds. Outsourcing became the buzzword of the decade, and right at the center of this digital revolution stood Infosys. It wasn't just a company anymore. It was a movement. Your initial investment, still growing, still compounding, and you're just watching. So, back in 1994, Infosys gave its first ever bonus. 1:1. That means your 105 shares suddenly became 210. Then, in 1997, yet another bonus. 1:1 again. Now, you had 420 shares. The year 2000 arrives, boom, yet another bonus. 1:1. Now you're sitting on 840 shares. And you know what? You didn't do anything extra. You didn't even put in more money, you just held on. Fast forward to 2004. Another bonus, 1:1. And now, you're holding 1,680 shares. Then in 2006, there was a stock split. Each share became 2. So, you now owned 3,360 shares. In 2010, there was a bonus again. 1:1. That means you had 6,720 shares. Then, in 2015, another bonus. 1:1. 13,440 shares. And in 2018, yet another bonus. 1:1. Now, you have 26,880 shares. In 2024, there was yet another bonus. This time it was 1:1. And now, you actually own over 53,760 shares. That's right. From just 105 shares, you now own more than 53,000. And the price per share? It's around 1,500 rupees. So your total wealth today from that 10,000 rupees? Well, it's over 8 crore. But that's not even the full story. Because Infosys gave dividends. Lots of them, honestly. In 22 years, Infosys paid out regular dividends. Some years, it even paid out special dividends. Those payments, if reinvested, would have added even more to your wealth. But here's the twist. Most people never saw this wealth. Why? Because they sold. They sold when it doubled. They sold when it reached rupees 1,000. They sold when the dot-com crash happened in 2000. They sold during the global financial crisis in 2008. They sold because they were scared, or impatient, or both. They didn't know that wealth isn't created in days. It's created in decades. They didn't know that the biggest returns come when you do nothing. You just hold. Through the market noise, through the news, through the crashes, you don't react. You stay. Because the secret to extraordinary wealth isn't genius, it's patience. Let's look at something deeper. Back in 1993, Infosys was just a small team of engineers. There were no massive campuses, no fancy branding, just a vision. They truly believed that Indian talent could build global software. They stuck to that idea. They built, they struggled, and well, they grew. And you just had to believe. That's honestly the power of conviction. Now, imagine if you didn't just stop at Infosys. What if you found the next Infosys? What if that stock is actually out there today and you just need to hold? But you'll never know if you sell at the first double. Would you have held? Would you have believed? Would you have waited 25 years to see magic happen? Because that's what real investors do. They don't chase. They don't panic. They don't jump ship. They stay through thick and thin. Because, wealth isn't a result of effort alone. It's a reward for time. And patience? It pays the highest dividends of all. This was episode 2 of What If You Invested. But let's pause and go deeper into this journey. Infosys didn't just become successful overnight. It weathered storms, faced slowdowns, had leadership exits, struggled with global demand changes, and managed currency fluctuations. So, back in 1999, the Y2K bug led to a huge opportunity. Infosys really rose to the challenge. And then, in 2001, the dot-com bubble burst. Nasdaq crashed and technology stocks were bleeding. Infosys fell, but it survived. And then, it came back stronger. In 2008, the global financial crisis hit. Clients cut budgets, contracts were paused, and Infosys slowed down. Again, it recovered. In 2013, there was new leadership and a lot of market uncertainty. But again, growth resumed. In every decade, there was a reason to sell. And yet, every decade, Infosys came back stronger. You see, long-term investing is not just about the company's performance. It's about your behavior. So, it's about the emotional roller coaster you must survive. There's the temptation to sell during a bull run, and then, the fear to exit in a crash. You feel doubt when others call it overvalued, and sometimes that regret when new stocks seem to perform better. Every long-term investor honestly fights these battles in their mind, and only a few, survive. Only a few become the legends. Because actually, it's not your money that's tested. It's your discipline. Infosys rewarded those who stayed. Let's break the myth, okay? Infosys was not the cheapest stock. It wasn't a penny stock. It wasn't unknown. It was just undervalued in potential. Most people saw it. Few actually acted on it. And even fewer held on. And yet that rupees 10,000, it turned into wealth beyond imagination. Would you be the one who saw? Or maybe the one who believed? Or, just another name on the list of I wish I had held on, because honestly, history repeats, and the next Infosys might be out there. But here's the catch. Will you recognize it? Will you invest? Will you wait? That's the question. And only time has the answer. Now let's examine one key idea, the power of time. Warren Buffett once said, "Someone is sitting in the shade today because someone planted a tree a long time ago." Infosys was your tree. Most people don't plant it. They chase the rain instead. But the ones who planted and stayed through seasons of drought and storm, they're the ones who found the shade. In 1993, rupees 10,000 was a serious sum. You could buy a scooter, pay 1 year's rent in many towns, pay 2 semesters of engineering college fees. Choosing to put it into a barely known software company, that took belief. But belief is the currency of every investor who wins big. They believe, not blindly, but patiently. They're okay with looking wrong in the short term if they believe they'll be right in the long run. Infosys investors looked wrong so many times. In 2000, when the stock fell 60%. In 2008, when global IT demand collapsed. In 2017, when founders and CEOs clashed. And yet, they stayed because they knew that the fundamentals were intact. And that's another lesson. Price is visible, value is not. Price goes up and down. But value? Well, it grows quietly in the background. The question is, do you have the patience to wait for the value to be recognized by the price? Because honestly, investing is a waiting game. It's not a prediction game. Let's say you had added rupees 1,000 every year to Infosys, just a small SIP or SIP in the stock. Over 30 years, that too would have compounded massively. And that's, the power of disciplined investing. You know, we always look for home runs, but sometimes small consistent steps take us further than big bold ones. Now, let's look at the final numbers. If you had simply held your rupees 10,000 in Infosys stock for 31 years, today you would have more than rupees 8 crore. And you know, if you add dividends and reinvest them, plus add small top-ups with yearly CEPs, the results are even more impressive. And well, that number crosses rupees 10 crore. But honestly, it's not about the number. It's about the mindset, the patience, the silence while you wait, and yeah, the courage to not react. And above all, it's the wisdom to understand that good things take time. Because you see, the markets don't reward intelligence alone, they reward character. This was episode 2, the story of Infosys, a quiet giant that rewarded those who waited. Will the next story be yours? Stay with us. Because, you know, the next episode might just change the way you think about wealth forever.